There's nothing
Wait,
more.
we don't get a gong? No gong.
No
Still
gong?
yet, honey.
No.
Oh yeah, wait.
We haven't
gotta
had a
wait.
gong in all of. We haven't had a reason for it in 2026.
Yeah, that's true. I mean, it was a dip yesterday. It was a dip. If I do remember correctly, it was a dip.
Man, it had me transferring cash.
Oh, that's something we got to bring up. I think I got a few calls and I couldn't answer them, but yeah, I would manage your Morpho loans if you still have them. Make sure you go monitor those things. Make sure you go monitor those things. Donald Trump was doing the same thing. Did you see? He was managing his Morpho loans.
Did he have Morpho loans?
Well, Aave, same difference, right?
Yeah.
So you had Aave loans. He had to sell $10 million in Bitcoin, so he didn't get liquidated. So
that's funny. Well, you know what? He's one of us, man. I guess.
One of us. One of us.
Yeah, I've never seen the Fear and Greed. I never really followed it that closely just until it keeps coming up lately. But I thought 11 was low, and that was yesterday. But I guess we crapped all over that.
11. It was 11 yesterday. What is it today? What is it?
Charlene said it got to 5. I don't think it's 5.
Oh yeah. Remember, see, that's the problem with this thing, right? It's 5. But that's the problem, is it's lagging. So yesterday it would have been lower than today. Today shows 5, not yesterday, right? So it's a lagging indicator for whatever reason. So you can't
Andy,
use it to predict anything.
If your yearly membership's coming due, just send us a bag of blood.
Oh, there you go.
Just send us a big bag of blood. Send that to Brandon. I don't even know where do you pay on this thing?
I'll take care of it. Just email me.
But anyway, yeah, just a bag of blood.
Not a problem.
Thank you.
I saw your email, Andy. I've had trouble. So
I'm not doing a show on Tuesdays when this market is in the tank. Because what happens is everybody's just negative Nancy. Is no point. Oh crap! You got liquidated.
Negative Nancy.
Mike, did they completely liquidate you, or was it like a partial liquidation, or like is just it all gone? I guess on the other side of it, if you did get liquidated, you did get the cash.
Sold at that level.
Well,
yeah, you sold at that level.
Yeah, you got the cash, so it's just a sale. So it is what it is.
Yeah.
I'm curious to see how that went down. Paid off your Bitcoin loan yesterday. Good. I paid mine down. I paid it down. I just didn't pay it off because I still want that leverage. But I paid it down where Bitcoin would have to get to like 49 before I would get whacked. And then I had extra cash there. I had extra cash. And if it got into the 50s, I was going to do another 100 racks and drop it down again. But I was using cash. So at first I was just adding collateral, but the collateral was dropping so fast. Like I added 2.5 Bitcoin. I added 2.5 Bitcoin at 70,400. I thought, okay, now we're at 60,000. Okay, well, that money's gone. There's 25K I just lit on fire. I'm like, well, I'm not going to give that Bitcoin away too. I guess the good part is if I protect this loan, when on the other side of it, I probably have a retirement amount of Bitcoin just sitting over there on that loan.
Yeah,
I'm over 20 Bitcoin on that loan now. Just sitting there. Yeah. But now I'm adding cash, not collateral.
Because the cash lowers it quicker too, right? It lowers the liquidation.
Well, the cash lowers it because if in a market that's going down, if you add collateral and the collateral goes down, your service goes up. You're not winning.
Yep.
You're not winning. Yeah. So, especially when you have to add collateral that's the same asset. And so that's dangerous. And you think, okay, it's a form of dollar cost averaging. That's true if you can find a bottom. But I think it's all just knife catching right now. You know, at a point, it no longer becomes about being clever, and it's just about being solvent and not completely just blown up. So, yeah. I would get liquidated at 50. I I would have said even 3 days ago, there's no way we'll hit 50. But it's Friday, going into a weekend. So keep your eyes open on Sunday. Because, well, good thing is most of the whales that would whale dick us have themselves been dicked. But this has been a tale of a lot of things happening. Institutions backing out of the trade, retail panicking out of the trade. There's AI to invest in, which makes Bitcoin look less interesting. All the other money, or at least the other excitement, got pushed into the gold and silver meme coin trade, which we see how that shit unwound. Bunch of jackasses that chased that chased 6 dudes at some banks with leverage. I mean, and again, I don't know. We said this for weeks and weeks and weeks. This is a fake trade. This is a leverage trade. There's no real money. Guess what happens? CME changes the margin requirements, and it all goes away overnight. The whole fucking silver market gets decimated in 3 days. Oh my gosh. Yeah, that wouldn't have happened if everybody was actually buying silver. But everybody wasn't buying silver. A couple of jackasses on the sidelines were like, what did that guy say, that douchebag that I blocked? It's about time that the free market, what did they,
oh yeah,
market. We're finally seeing the free market. If you think that's the free market, you're a damn fool. Only an idiot looks at a straight up line and says that's organic behavior. It's so stupid. It's mind boggling. So, you know what's organic? 45 degrees. That's good. You know why? That's logarithmic. That's a squared chart. That's fast. Most economies move like this. Right? Not like this, and certainly not like this. So when you see that, it is inorganic. So you say, well, it must be leverage. Guess what? It was leverage. And there was a bank, I can't think of the name. We were talking about this yesterday, Brandon. There's a bank that went under over this.
Which bank?
Let's see. Benjamin Cohen rubbing metals trade in crypto folks' faces. Told me, oh, yeah. Benjamin Cohen's a moron. And also, I don't mean to besmirch the guy. He's a nice guy. Like, he seems nice. Like, I've heard him talk and stuff. Like, okay, he seems kind of simple. Like, I thought maybe he had like a extra chromosome or whatever, like not Down syndrome, but close or whatever. But like, okay, good for Ben. He found his niche. He can make money off idiots that believe in patterns. That's fine. Even though if you do the kind of like the common sense regression of what a pattern that was successful would mean. Like I was talking about that on the option show. Okay, Brandon, you are a technical guy and you discovered an actual chart that predicts the future. What do you do with it?
I keep it to myself.
Yeah, until you have all the money.
Yes.
Because the minute you let me in and 700,000 other people in, the chart becomes immediately null and void. Why? Because people front run the chart, and then people front run the people front running the chart, and then they front run it becomes a box within a box within a box within a box with it is muted instantly. There are no charts that work, and if there are, you'll never see it, because if it worked, one individual would be capitalizing on it, would need no one else, and would end up with all the money. And because we know as humans, common fucking sense is that there isn't only one person with all the money. So since we know that to be true, charts are fucking bullshit. They just are. Sorry, I don't tell you. So, but humans love patterns. We're pattern-seeking creatures because we can reduce mental fatigue and tyranny of choice and the perplexity of thought comparison. We deal with this a lot with cinema. A lot of what we're doing at cinema is the way people think, because it's about storytelling and letting people tell stories. You really have to think about thinking.
Mm-hmm.
Well, humans seek the kind of the kind of thought patterns and the heuristic patterns that allow them to just spend less energy on thinking. People like to reduce thinking. They like systems. They like systematizing things. They do the same thing when they wake up in the morning. They brush their teeth, and their brain is somewhere else because they've offloaded all of the mental tools and processes to they've systematized, right? People want to systematize investment. I think the only way to systematize investment is to push money into a 401k and let the passive indexation effect kick in, right? Let the machine buy for everyone, and it's always buying, always buying, always buying, right? That's how you systematize investment. If you want to actually invest and read and do the research and all this kind of stuff, you have to admit to yourself that you're doing some speculating because you're betting on a thing. So then you're going, can I out speculate those jackasses over there that care more about the Super Bowl than their investment future? Like, how much beer are we going to buy this weekend? Oh, wow, that's pretty important stuff. It's pretty awesome. Anyway, so long story short, charts don't work. They can't work. Like, they cannot work. So it's best, I think, if you don't get sucked in, don't even read those guys. Don't even pay any attention to them. Because if you do, you start to, well, maybe, these dudes are all broke, man. These dudes are all fucking broke. All of them. They don't have a nickel to rub against a penny. They're all broke. The money that Ben makes, it ain't from investing, because if he took his own advice, he'd be bankrupt. And most of them will say, well, I don't trade because I don't want it to be, I don't want to be emotionally invested in my information that I give you. Yeah, great. So TA guys don't use TA. Yeah, CME, Sean, I think, and again, what they did was right. They saw the trade getting crazy. I mean, silver looked crazy. Gold looked crazy until silver out crazied it. Like, you break up with your girlfriend because she's insane and find out she's got a twin sister that's even more crazy and just got out of the mental institution. That was silver. And also, clearly, though that move, it was obvious that there wasn't actual money behind it. It was leverage. It was $1 pushing $7,000 worth of leverage into the market, and a bunch of guys that were playing with other people's money that just didn't care if it didn't work out. Oh man, they got us. Woo! We had a good run though. It's not their money. They don't care. And that's what you got. And so the CME was like, no, because what this is going to do, and they're right about this, it's going to suck Joe Six-Pack off the sidelines, and then people are going to start going and hitting their 401ks and pushing it into gold and silver and watching it all evaporate. And for that period of time, those few weeks, just recently, how much money was lost, do you think, from the 120 top to where it is now? A lot, I'd say.
Oh my gosh.
What was the market cap of silver?
Trillions. We shut on the show that one.
Realize
trillions.
It's
trillions.
Fake money when it leverages up, but when it unwinds, it's real money that goes away. Right? Because it's all the people that got sucked up into the hype.
Yeah.
Yes, Scott, a lot of people believe in it, and this is why, even the other thing, this is why technical analysis is not even 50% accurate. It's like 30-something% accurate. It's less than a coin toss. Because when you believe in something that's provably false, you have to win twice, right? You have to believe in the magic, and we know there's no magic, and the magic has to accidentally be right every now and then. You start behaving and making decisions based on magic. That's not, well, you know what? I'm not going to say it's not an investment strategy. It's not a good one. It is a strategy. But I hear all the time these stories. Oh yeah, I followed these technical analysis guys for a couple years. I lost a bunch of money. No shit. There's no other outcome. There's no possible outcome. So it's like, And I just wish people would I just wish they would do that regression, just a common sense 5-minute logic line and go, oh, of course it can't work. It can't. Yeah. So quit, stop. You want to, the way to win is to look at where those crowds of idiots are going. There's a lot of idiots out there, man. And it doesn't take much to be a little bit more in tune or intuitive than idiots. They just don't know shit about shit. So just be a little bit better than the idiot. All you have to do is be right a little bit more than 50% of the time against a little bit more than half the people, a little bit more than half the time, right? Like, that's it.
Yep.
It doesn't take much to win because, again, you get the compounded effect of winning a little bit more than half the time over a little bit more than half the people. And eventually, you're a 1%er just because math. So, yeah. All right, that's I think I used profanity in a
I don't
good
think
way.
you used it. Like, I don't, very little. Very little.
S-bombs. Yeah.
Well, it was strategically placed, if anything.
Yeah.
Especially when talking about Ben.
Yeah.
When talking about Ben Cohen.
Yeah.
It was strategically placed.
Yeah. I almost had to.
So, yeah, I'm necessary at this point. Yeah.
Okay, where are we at, Brandon? What do we got?
Let's go. I mean, let's just go behind the wall. We'll talk about all these charts that I have, and then let's go back and talk about some other things that blew up, what didn't blow up, what mistakes happened.
Yeah.
Crazy time.
Oh, so crazy. So crazy.
Going behind the proverbial wall now to continue the broadcast privately for the digital investors and digital private clients. If you'd like to join us, simply go to nickblacknext.com and subscribe to one of our plans and immediately take advantage of our library of tools, tactics, and information. It's all designed to help you learn, grow, and manage your portfolio like a pro. Join us now.
Join us now.
Join us now.